Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 25th of January, 2021, 5:45 p.m. Whoever thought GameStop? Yeah, GameStop, those stores that sell primarily, as I see it, used games and other things. To me, it reminds me of a Blockbuster. And yet, if you watched the action today, unbelievable. It took over all the news on CNBC. I was watching it. They just couldn't stop talking about it because the stock has just exploded as short sellers, that's what they're saying, got caught in this market. I don't know. They keep talking about the Robin Hood type traders, which are these younger traders that the profile of them, they trade on the zero commission. They go on social internet sites and they gang up on different stocks. I also read over the weekend a great article. How many of those traders are now turning to pros to help them with their trading? They realize that what they're doing, and they do get successful on some swings, but they lose on a lot of swings also. And maybe that's not the moves they want. There was a huge article on that this weekend with facts and figures, how many are now moving to accounts more traditional in nature, where they want some advice, they want to buy advisory services like I offer and so on. I see it in the growth of my business, and people are asking that. So just something to keep in the back of your mind. We have the FOMC meeting this week. We get a number of other data. We get the sales data tomorrow from Redbook. We've got some price indices coming out tomorrow as well. The Davos conference is going on. Janet Yellen, at about, 30 minutes ago, was approved by the Senate to be our next U.S. Treasury Secretary. But more important, the first Fed president I know that did that, the first woman that's our Treasury Secretary. Let's applaud her. She's more than capable. Great pick. And on that, you can see how Democrats and Republicans can get together. Everything else, who knows? All right. So the gold market holding on today, dollar slightly higher at the expense of a number of currency plays. Grain markets took off to the upside, so that correction, well, it's getting its first bounce, and bonds and notes have been rallying. When we look at the S&P 500, you can see how the market continues to the upside. This is, if the market were to stop trading right now on a closing basis, an all-time high. So the market continues to propel itself higher. You wouldn't know it with the crazy swings, but that's what's going on. As for the actual swings in the market, well, we didn't intraday make it the highest high that we could. You have a big up day. What else did you see today? Let me bring you back just one day here so you see it. You'll see you have an outside day up. Outside days, to me, are very important. I don't want to see the low of an outside day taken up for the next two trading sessions. If it takes place specifically on Tuesday or Wednesday, I will call this a bull trap. And from there, I look for the market to retreat back to the closest moving average underneath it. Now, the major moving average. In this case, in looking at them, and I'll get to that in a moment with you, it's probably the 18-day, but we'll see it in a moment here. You've got higher lows, higher highs. That's certainly bullish. The moving averages come in, as you can see, the 18 right here at 37.88. Let's round it to 50, and that's right at that last break low of today. Interesting number. What about resistance on the upside? It's going to come in at the Bollinger Band at 38.82 and a fraction. So let's stop right here. If you were to take out 37.8850, you're already right on the support number I'm looking for the market to go to. Therefore, that particular bear trap, as it typically reverts to a major average, it's right on it. Not much I could do with that. What about slow stochastics? Are they giving us a story? This is where the whole game is, in my opinion. You have embedded. When you embed, it means that you've taken a market and you've converted it, if it's bullish embedded, from overbought to locking in momentum. That locked-in momentum can be measured by the slow stochastics going sideways over 80 for several days in a row. As I told you, I'm coming out with 3 courses. Bollinger Band Enhanced. not the basics. This is going to be what I call the enhanced version of Bollinger Bands, enhanced slow stochastics, and enhanced use of outside days. 3 different mini courses coming out on it, very reasonably priced, and I have not yet recorded them. I am actually laying them out right now. I'll decide which one I'm going to record first this week. But to make a long story short, higher lows, higher highs. Each time you hit the upper Bollinger Band, I think the pros are taking money off the table, putting them in a position on pullbacks to buy. And I think they want to keep a fairly short leash on all this. You know, there's question what's going to happen with the $1.9 trillion relief package. I think that realistically, it's just no chance of getting through the Senate. I think realistically, everything was thrown into that wish list. They won't be able to justify those numbers. It'll come down and some package will come out of it. That's the art of negotiating, and that's what we want Congress to do. We'll see if they can do that, but just my thought on it. What about the next one, the Nasdaq? Well, have we embedded? Let's not count today. If you don't count today and we go back to Monday, right here, both numbers over 80. Friday, both numbers over 80. And Thursday, not so. We don't know for today, Tuesday, where this market's going to finish. So I can't tell you that it's embedded. I don't know. It's overbought. It's against resistance. What do I think the pros are doing? I think they're taking money off the table. You do realize that you have 100 S&P companies that make up the S&P 500 reporting this week, 13 of the, I think it's the Dow Industrials. You got a lot of earnings reports coming at you now, folks. I think the pros are going to take some money off the table. If the market, because it had an outside day up today, were to take out 13,189, either on Tuesday or Wednesday, this bear trap gives me a projection, at least, of a possibility of making a quick run back to 13,016 to regroup itself. As we step to the Dow is not like the other indices. The Dow has a lower low, a higher high. It doesn't have the embedded reading. It lost it. It pulled back to the 18-day average as I expected, and it's just sort of drifting. This is not the strongest of the indices, at least at this point in time. And when we step over together and we get over to the Russell, this is the strongest. It's got the fully embedded reading. It keeps coming up. So, and it's not a new embedded reading. It's been in place for quite a while. This market did, on the charts, make a new all-time high today. So, I like it there. That market's looking pretty good. And until that embedded reading is lost, we'll see if the market can get up to the upper Bollinger Band. In the VIX cash, what did you do today? Now look at the chart. What do I tell you here? The first time you hit a Bollinger Band, that is where I think pros go and say, okay, I'm taking my money off the table, or I'm taking a chunk of the money, I'm moving a stop way up, and if that market can't hold, I'm out of that thing. Well, that's what I think happened today. You're caught in this wild swing, but notice what's happening. You're not attacking the Bollinger Band bottom. You keep attacking the Bollinger Band high. So the markets, as it gets nervous on these breaks, those buyers are showing up in mass. When's the last time we hit a Bollinger Band low? You have to go back here to September. That gives you an idea as to what they would do if they smell a problem in the market. And every time they smell it, they drive the market back to the upper Bollinger Band. In the bonds, you're corrected, past tense now, an oversold condition. The trend is up, the bias is up, but it's a monster risk. If you put a stop under the recent low of 168.6 and you're right now at 169.31, do you really want to risk almost $1,800? It's an awful big risk. I wish you the best with it. 10-year notes. All of a sudden, with this action, you can take off this red down line, and you've got higher lows and higher highs. Momentum up. I don't think you're going to get up to that number up there, but the market's taken out these shorts, and it's now come back for this whole break that we had at the beginning of the year. And if you'll recall, when this was happening, I said, be careful. You don't stay on that side of the Bollinger Band very long. Well, if you didn't believe me, a little bit of problem for you. It's the first time today it's closed over the 18-day average since this whole affair began from the beginning of the year, too. I think it's evening up in front of the Fed meeting. Dollar index. Today, if you're a subscriber of mine, and in the morning when I put out my update, and I did put those out, our website went down this morning about 11 o'clock. We took it down. We had to do, unfortunately, we had an issue with it. And it had to be repaired, and we hate doing that, and there's nothing I can do. My website, though, is only for my videos, and it's like a catalog website. All the important information is either sent to you, it comes there, and we have a backup called our QT backup. So our traders always have something. All my paid subscribers, they have backups galore if anything should happen. But to make a long story short, you held this 18-day average. Now, this market's in an uptrend unless and until you take out 90.03. Take that out, you could end up with lower highs, lower lows. What I said and what I started to say today is I told my traders I think the pros are going to buy this market right at that 18-day average, which stops under that 90.03 level. They could get a short sale. They could buy it, see it try to pop. If it fails, they could even end up out of that in short. As it ends up, it held. We'll see what I say in the morning to them. In the eurocurrency market, we've got a market that continues with lower highs, lower lows, a downtrend. It's not trying to crash in price. It's just not ready to move to the upside yet. Could that happen off of a Fed statement? Yeah. Could it happen off some other event? It could. But the trend is down. Why are you trying to be a hero? If the market gets and closes over 122.08, I will become bullish. Until that occurs, I remain in the bear camp, very aware of a very oversold condition that is not getting my interest from wanting to play the short side. British pound has been one of the strongest currencies recently. And I realize everybody's got to be saying, what? This was a currency that was supposed to fall apart with Brexit. Okay, not the case. Higher lows, higher highs, but all of a sudden, it's starting to give a little bit of a roll as it keeps hitting the upper Bollinger Band and can't get through that number for any lasting amount of time. As we step to Bitcoin, all it did today is rally back to the neutral point. What do I teach you here is the line in the sand, the 18-day average of closes. So if you look at this market, and let's get back over, take away today's action too. This was Friday. You were probing. Could you get to the lower Bollinger Band? Maybe. But the resistance is the 18-day average, that line in the sand. And that's all that you really did today. And now you're just sort of hanging in there. Will the market do anything from here? Hard to tell. It's in a downtrend. It has momentum down. And it is not yet oversold. If it wants to break further, the Bollinger Band waits with its support there. And resistance stays temporarily, at least, at 34,612 in a downtrend. In the energy markets, you still have the differential between Brent and WTI down. My eyes going over to the TV. I see that the House of Representatives is making that walk, that famous walk with its impeachment papers. It's going on as I'm talking to you. And, you know, I love history, so that's one of the things you watch. In terms of Brent, you've got the trend down, the bias is up because you're over the 18-day average, and momentum is lost to the upside. A very difficult chart to try to make anything out of. WTI oil, same thing. You're losing your embedded reading. I have been telling my subscribers, I don't mind saying this to you, don't be involved in the crude. And I started saying that 10 days ago or so, and I feel good about it. The market looks to me like it peaked out up there. Now, will heating oil lose its embedded reading? It's flirting with it tonight. If it does, I look for the 18-day average. The strongest to me has been gasoline, and the most neutral is natural gas, which just keeps coming back here, hanging at that 18-day average of closes, so nothing there. You know, you get the swings like you had in the stock market today, and I'll never understand why people don't enjoy volatility. I do if you can control your risk. One of the ways to do that is trade these 1/10 size contracts. We make it easy. The margin's a tenth, each tick is a tenth the size, and we take the commission down. In futures, I don't know of any firm that is commission free. We charge $1 a side. Come on. The exchange is taken down its fees. Everything is smaller on it. So instead of $50 a full point in the S&P, it's $5. You can see what they all do. This is what the value of ticks are. If you'd like to work with us, open up an account to trade these, look at our platform. I'll even help you with some of our, I've never said this. Maybe what I'll do is open up an account with us, fund it, make a trade. I'll give you a month full research from me. I don't mind doing that. So give us a call. 866-973-2077 to find out more information, www.iraepstein.com, but put in the word /micro. That'll tell you all about that. All right, the website, no, we didn't put that there. We've got a special page for you to learn all about that. I think you'll like it. I'm Ira. That's the first offer I made off the seat of my pants, period. You have a good day.